Just before the break, we had Hemaka raising some very interesting observation. We need to get some little more discussion before we go to the next proposal. So I'm going to ask the Governor. You want to respond to that?
Yes, I think Hemaka must be definitely excited about the proposition of being able to go up to $250 million and take that into his balance sheet. Of course, it has certain conditions as to where he should lend, etc. But he raised an interesting point whether it should definitely be for 10 years. The idea behind the proposal is that they will have the latitude to decide on that. It can be up to 10 years, and then if they find that the interest rates are favorable to them, if they borrow 5 years, well, that's something that they could do for themselves. But the idea is that they will be one of the key recipients of foreign money coming into the country, so that they will be also able to ensure that that gap that we talked about is fulfilled. The other part of it is, as a national savings, as a national development bank and the DFCC, we believe that since they are borrowing long term, there has to be some comfort also being given to them. So that's why the government has undertaken the risk as far as the exchange rate is concerned, so that it won't be a hit onto their balance sheet and their P&L, but it will be something that the government will take care of.
Okay. Yeah, as a bank who had gone out in the market before, a quick comment?
Yes, I think we certainly welcome the concession given to the two development banks, NDB and DFCC. But one comment would be that whether the 250 per bank would there would be enough opportunities within these banks initially, given their balance sheet size, to lend to their fullest potential. What we would perhaps like to propose as a counter is, while they could be the anchor banks mobilizing, for the other banks within the market who have the depth and the ability to lend long term, to be part of that whole process, while these two act as the apex, but for the others to be participants in that process and make use of that in case they are not able to fully deploy those monies.
All right. We heard enough from the bankers. Kumar, I'm going to ask you. Let's hear from the non-bankers. What do you think of this?
Yeah, putting my exporters hat on, Riaz, I think it's a proposal to be welcome, because exporters who earn in foreign currency have a way of paying back loans that they can raise overseas. So I would say corporates who are involved in the export business will also welcome this move.
Okay, so that's good. It's a great start to it. Suresh, let's get the next one.
There will not be withholding tax on listed corporate debts.
All right, that's an interesting thing. Who wants to go first on that? Tia, can you?
I'll take that, Riaz. I think that's a very welcome move, and I think the capital markets participants in a recent consultation with the Treasury Secretary brought this up and said that this is a very important ingredient to develop the local capital market outside the banking system. And I think corporate debt in this country as of today is very little utilized at the moment. So I think the removal of the withholding tax and the incentive will certainly give local investors a greater scope to participate and hopefully develop this industry.
All right, Suresh, as a corporate entity who might use corporate debt, how do you see this? Do you think this is something that we needed a corporate debt market? We have been talking about it. Where do you think this will lead us to?
Yeah, certainly. I think it gives greater scope to the corporates to look at other avenues of finance, and in that context, yeah, it's a very welcome move. I think the private sector has been looking at opportunities in this area for quite a while, and the fact that there is some kind of easing in the situation, it's fine.
Governor?
All over the world, when countries move towards higher economies, and Sri Lanka is now pitching to becoming a $100 billion economy, you would find that the debt market is about at least 30% of GDP, which means we should be at about $30 billion debt market. Right now we are less than $1 billion. So we have a long way to go. The proposal will encourage the deepening of the debt market, which means that by the year 2016 we will at least hit a $10 billion mark, and that's an important milestone for us to reach. I think it should be actually more than that, but if we can get to $10 billion, and this proposal I'm sure will help, as Suresh quite rightly mentioned, that would be realization of the objective that His Excellency the President has actually articulated today.
Yeah, I think that's great. Hemant, you want to say something?
I just want to say that NDB Capital is going to launch a corporate debt bond index from next week, and it will be quoted daily, so I think the timing is immaculate.
Great. So there you have somebody first off the block. Right. Okay.
It was coincidental, but it happened like that.
Anu, you want to say something quick before we go to the break?
Yes, I think it's a very, very important move, Riaz, because we need to have medium to long-term capital instruments for the economy to develop to the next stage. Once we deepen the bond market and debt market sufficiently, we can even start seriously thinking of private sector engaging in infrastructure, those lumpy investments which take a long time to give a return. So this is an essential thing, and I think a right first step in the direction.
Okay, thanks. Let's have a quick break before we take the next proposal on. We'll be right back. Let's hear the next proposal.
Exemption on interest granted for foreign loans have been extended to cover bonds as well. In addition to that, there is a lower rate of 10% granted to unit trust management companies. And in case of investment funds, if the funds have not been utilized by the June 2013, then the money should be transferred to the Treasury.
All right, thank you. Three interesting points that are there, and again I'm going to ask on the bonds, what's the difference between the earlier thing that we discussed and this exemption?
Then this will certainly be a boost to the bond market, the development of the bond market. In the past, if it was a typical loan, this exemption was given, but I think given that we are actively encouraging the development of the bond market, this will be a very important catalyst. Right. If I may also touch on the investment fund, I think this was given as a result of streamlining of local taxes for the banking sector last year in the budget, and it was expected that the savings accruing to the banks should be productively deployed as part of nation building. And I think this proposal is very timely, because there are some banks who have gone out and leveraged their balance sheets and applied, but there are others who have not yet done so. So I think the timing, the fact that they are given 6 months more till June 2013 to do so, if not to put it back through the Treasury, is I think a timely prompter for those who have not yet made use of this concession to move forward.
Or the stick, the proposal.
I think people have realized that we are keen about this, and the President has articulated the measure that if you do not use it, well, it shows that you don't have the opportunity of using it, or that you don't want to use it, which means you have to use it, it has to be used by someone else who can do so. So that's the idea behind it, and I believe there has been a very clear message that has been articulated even previously in relation to the amount that was allocated for agricultural lending. There was a long time, although the provision was there that 10% has to be allocated for agricultural lending, many banks did not do so. But last year, the central bank decided to take back what was not lent, and then it was channeled to a different fund, and it was used for that purpose. Yes. I think now the message is very clear. So if they do not use it for the purpose that it has been earmarked for, then we got
big
to give
stick
it
will be used.
Well, I didn't use the word big stick, but you used it. But I think it can be described that way.
Yeah. All right, Suresh. They talked about reducing the income tax rate on unit trust management companies. Is that going to do anything to the unit trust market? Because the reduction in interest rate is for the management
company, exactly, yes. it's interesting really to find out what the real rationale for that is, because it's for the management company.
To that. There is also this incentive where foreign expat workers have been encouraged to invest in the unit trust. So therefore, the management, unit trust management companies can use this incentive to go out and sell the unit trust in those capital markets which are dominated by our foreign expat workers.
So there is an incentive for the companies.
There is a connectivity between the two, and it would be great if these guys can invest in unit trust. It's going to be tax-free for them. So,
actually come in on that, as Hemaka mentioned, there is a necessity for the unit trusts also to now expand their own fund bases. Unit trusts have been around for a long time, but if you examine their cumulative balance sheets, you will find that their total funds are still at a very, very low level. So it needs to be now revitalized, and perhaps this is one measure of encouraging that. We also would like to see some of the foreign Sri Lankans or other Sri Lankans resident abroad, as well as any other foreigners also, investing through the unit trust in the stock market and any other instruments. So this will provide that new space for that to happen, and we think that will encourage all these investments to now flow in through a mechanism which is fairly well structured as well.
All right, Suresh, let's take the next one on. I know we have lots of proposals to go through.
For the first time in Sri Lanka, wholesale and retail businesses have been brought within the value-added tax net. That this is in addition to the NBT. Right. If the quarterly turnover is above 500 million, that is the threshold, then only they will have to pay VAT.
Okay, that's an interesting proposal. I'm going to ask to Hemaka to go lead on this, because you do a lot of retail as well on this.
Even at the current moment, if a retailer imports and sells, is liable to VAT. But if he manufactures and sells, he is exempt from VAT. So now manufactured goods which are being retailed by retailers would also be brought into the VAT net. So there would be some price adjustments upwards, but fair enough, because these are for the more high priority goods. But I don't know how the supermarkets are going to work, because this would also apply to the supermarkets where goods are manufactured locally or processed locally and then sold through the retail network. So there would be some price inflation taking place. That's my own interpretation of this tax proposal.
Suresh, as a company who manufactures and retails, you'd like to come in on this?
Yeah, in addition to some of the prices going up, I also see a situation where between the supermarkets and between the smaller players, the mom and pop shops, there would be a difference in pricing, because straight away the supermarkets, for example, would need to add on 14%, I believe, onto their pricing. They have no option but to do that, because their margins in any case are rather low. So I'm not sure whether this has been sort of, in a sense, purposely done, if I use the term, to give a slight advantage to the smaller retailers. I'm not sure whether that's really been the intention, but certainly there is going to be a pricing differential between the two.
I don't know. I'm going to. I thought that VAT shouldn't, properly implemented, shouldn't have much increases in the ultimate tax, the price to the consumer. What's your take on that?
In practice, though, if the margin of the retailer is impacted, the temptation is to recover it from the consumer. Now, when you keep differential between sectors, the issue is will the market leaders' action be followed by the followers as well? If supermarkets have to increase their prices to cover the difference, will the smaller people also be tempted to follow that? If that were the case, then the price level will go up across the board. So we'll have to wait and see what the impact of that is going to be.
Quick response before I break.
Wait and see.
Wait and see. All right, I think that's a great time to break. We'll have a quick break and we will come to the next proposal. Right back.